Hello, I'm Locke Meredith. I'd like to invite you to join me on the next Legal Lines. I have Carolyn, Burris, and Brenda Evans with the Louisiana Housing Finance Agency. They're going to talk to us about the various programs that the state of Louisiana has to help folks buy homes and rent apartments. And we're talking about folks with not what you would typically think is low income. The income levels can be as high as $70,000. So join us on the next Legal Lines with Brenda Evans and Carolyn Burris.
Cox Communications is homegrown with local programming for you. Whether it's local sports, local arts and education, local news and weather, local faith and worship, or local stations with the best in entertainment, Cox Communications brings it all home to you. It's homegrown programming with roots, only on cable, only on Cox.
Welcome to Legal Lines. I'm Locke Meredith, and I'm pleased to have on the show today Brenda Evans. She's with the Louisiana Housing Finance Agency. Brenda, thanks for being on the show.
Thank you for having me.
Tell the folks exactly what your position is with the housing agency.
I am Deputy Program Administrator with Louisiana Housing Finance Agency. We are the state housing finance agency here. It's our mission to promote decent, safe, and affordable housing for all residents throughout the state. We were actually licensed or given our commission back in 1980, so we've been helping Louisiana residents for quite a long time.
27 plus years, huh? And over the course of the history, it's pretty apparent that the resources that have been made available to the housing agency has significantly increased.
Yes, we use mortgage revenue bonds. We administer the low-income housing tax credits. We have some programs that help with weatherization, energy efficiency, bonds. So we have a variety of means to be able to help the citizens of Louisiana attain safe, decent, and affordable housing.
So let's talk about how the agency does that. There's really kind of two sides to this equation. One, as I understand it, the agency helps buyers acquire a home or rent an apartment or multifamily housing unit, correct?
That is correct. We have a home ownership department, and that actually helps persons to purchase homes.
All right.
Then on the rental or the multifamily side, we have an array of products that we use to help developers to be able to build affordable housing.
And that's kind of the supply side of it, making sure that the units are out there, the homes are there, or really the units are out there for folks to rent.
That is correct.
So let's talk about the first side of this equation. How does the agency go about helping individuals acquire a home?
Okay. That's through our home ownership program. We are issuers of multifamily revenue bonds. So we take those bonds and we're able to offer to folks below interest rates, market rates. And in addition to that, many of our programs also have subsidies to be able to help them with their down payment and closing cost assistance.
Let's talk about what those programs specifically, I think there was 3 or 4 different ones. Explain that.
We have an assisted program, for example, that helps persons with up to 4% of their loan amount. So those funds, it's a non-repayable grant, they can use to actually help with their down payment and closing costs.
So it's given to them and there's no strings attached.
Exactly.
They don't pay it back.
Exactly. Also, we have a program that we use in conjunction with some home funding, which is federal funding. And depending upon the purchase price of the property, they can get anywhere between 4.5% and 9% on that program. And again, that is in the form of a grant to help them with down payment and closing costs.
And so is the money that they receive targeted for use in the purchase? For example, it has to be used for down payment or has to be used for closing costs?
It could be used for either one. The resident, of course, has to be here in Louisiana, but whatever the need is, those funds can be used for. And what's interesting currently with our home program is that we were able to build in a subsidy to help persons address the high cost of insurance. So on our home program right now, you can get about $160 that's able to help you with your insurance.
Makes sense.
It does.
It's a cost I wasn't even thinking about.
Because as we move forward, as you mentioned at the beginning of the program, as we see a need, the Louisiana Housing Finance Agency, we try to address those needs to make it more user-friendly.
Now, as I understand it, so that is enabling folks to get funds to provide a down payment and pay for closing costs and insurance so they can qualify for a loan.
That is correct. And on that note, I'd just like to mention that with all of our programs, because we are targeting the low to moderate income, that there are certain restrictions, such as income limit restrictions as well as purchase price restrictions.
Right, and we'll get into that in a minute. The other side of this is that there's actually mortgage bonds. So that's the giving of money to buy a home. There's another side, and that is reducing the monthly cost via the loan. payments. Explain that to folks.
Sure. Because we're issuing because we're issuing mortgage revenue bonds, we are able to offer those rates, those loans, at a much lower amount. Like if you take, for example, right now, conventional or non-bond loans are probably around 7.25%. On our existing mortgage right now, with assistance, with the 4% assistance, you're looking at a rate of about 5.99 because we're using the mortgage revenue bonds. So on a principal and interest basis, on an average loan amount of about $118,000, you're looking at a savings of over $100. So that's really a savings for purchase.
Sure. And so that you said an average purchase price of $118,000?
A loan amount of about $118,000.
And then they would receive 4 to 9% of the value of the home or the purchase price as a grant?
Strictly on the assisted, you would receive 4% assistance. If we were to put it in conjunction with the home MRB program, it could be a range anywhere between 4.5% and 9%.
Now, the whole mortgage bond process, are these monies that are generated, in other words, the state is in essence, I guess, borrowing money to buy down interest rates from banks?
Louisiana Housing Finance Agency is actually the issuer of the bonds. So we're able to issue those bonds to be able to generate the funds to make the mortgages that we do.
So is the agency actually the one that's lending the money?
Yes, we do. We do this through our participating lenders. We go through a network of participating lenders. So persons actually access our funds by applying it through a participating lender.
So it is the housing agency that is really basically loaning the money to the folks at a low interest rate, but it just uses local banks that have been approved.
That is correct.
Okay, so the bottom line is, for the buyer, the agency can provide them cash grants that they don't have to pay back to deal with closing costs, down payments, etc. And in addition to that, they may be entitled to low interest loans that will save them as much as $100 per month on their mortgages.
Right, and the two work together because actually when you apply for the mortgage loan, you receive the subsidy or the assistance.
It's automatic?
That is correct, depending upon the loan type. We've talked about the assisted loan, we talked about the home MRB loan. In addition to that, we have what we call the unassisted loan rate. You don't get any assistance with that, but citing the example that I used earlier, you do get a below market rate. Right now we're at 7%. If you get to in the 5s, you're looking at substantial savings.
Sure, sure. Explain, when we say low to moderate income folks, kind of explain what we're talking about.
It actually goes by the area median income. There are a couple of factors that are involved. You look at the area that you're purchasing the house in, as well as the number of people that are residing in the house. Another factor that you may want to consider is whether or not you're in a targeted area. Typically, targeted areas are areas of economic distress, but also these targeted areas are listed on our website. But we take, for example, here in Baton Rouge, I'll just use a round number. If you're looking at a family of 3, depending upon the type of program that you are qualifying for, your income range could be about in $78,000 for a family.
And still be entitled both to the grant of money that you don't have to pay back and the low-income mortgage.
That is correct.
That's extraordinary. Now, as I understand it, it used to be that the programs were limited to single-parent households. That's not the case anymore.
I think what you're talking about is the ADDIE program, and you're right. On that particular program, applicants would be eligible for the greater of $10,000 or 6% of the sales price, and at one time it was restricted just to single-parent household. But again, in our effort to be able to broaden the scope, we offering it to persons of, you do not have to be a single parent, so any family would be able to qualify as long as you meet the other criteria such as...
And so the folks that are entitled, or the criteria that the agency looks at is where you talk about buying, how much income you make, is it a distressed area like Katrina or Rita, and how many folks are in your family.
That's right. That's basically it.
Okay, we'll move on to the next issues in the next segment. This is Locke Meredith with Legal Lines and Brenda Evans. We'll be right back.
Television has evolved to the sensational. Cox Digital Cable is high touch with an interactive program guide anyone can use. Cox Digital is tasteful with sophisticated programming choices that stimulate, educate, and make you feel great. Cox Digital is sight and sound extraordinaire, especially on an HD set. Eye-popping clarity and 5.1 surround sound. Cox Digital lets you smell. Well, we're working on it. Experience the digital evolution with Cox Digital Cable, television for the senses.
Welcome back to Legal Lines. I'm Locke Meredith, and again, pleased to have on the show today Brenda Evans. She's with the Louisiana Housing Finance Agency. Again, Brenda, thanks. We were talking about the programs available to low to moderate income folks, and frankly, it seemed a misnomer to me because folks earning $78,000, that's a lot of money.
And that's a very good observation, because depending upon the program, that may be the high side for here in Baton Rouge, and some income limits are lower, but we do touch an array of persons. So before you make the assumption that perhaps you don't qualify for our programs,
right.
It would be a good idea to check into them.
Now, the source of the money for both the grants, the money you don't have to pay back for closing costs, et cetera, and the buy down on the mortgage is the state government for the most part.
Well, as I said, we are actually the issuer of the bonds. So we issue those bonds to make them available to persons. Depending upon the program, for example, our home MRB program, we do utilize some of the home funds that we receive in an annual allocation from HUD.
Federal government?
Yes.
Let's say somebody's watching the show and they're going, I can't wait to do this. What do they have to do?
Let me just say that it is our goal to have funds available 365 days a year. But because of the low interest rates as well as the other perks that come with these programs, sometimes it goes very quick. Right now, if you were interested in purchasing a home, we would advise you to go ahead and make contact with one of our participating lenders. Our website, which if we get posted to the page, it would be great, www.lhfa.state.la.us.
Say it one more time.
www.lhfa.state.la.us.
Okay.
There you will find a complete list of our participating lenders, as well as the current rates and a description of our program. Contact one of those participating lenders. They will take you through a very similar process as if it was not a bond loan. Well, they will verify your income and all of that information. They will submit the package to LHFA. Once we receive it, it's usually about a 10-day turnaround for us to be able to give an answer. And then at that time, you move into the closing.
And so, again, just as a summary, the factors that you folks look at and the bank has to look at are the size of the family, where they're buying the house, and if it's a distressed area or a low economic area where it's struggling, that's a big plus. And then how much you're needing to borrow, I guess, huh?
That's right. And we call it like a targeted area. And there's an array of things that we look at. But what I would really advise is that if you think that you're interested in applying for our program, to contact one of those participating lenders. Because even though we call it a first-time home buyer, there are exceptions. For example, if you were living in New Orleans or a place that was hit by Katrina and your house was damaged, then you will qualify for our mortgage, even though you're not technically a first-time home buyer.
And for example, I think y'all had mentioned that y'all had a first responders program, which I thought was really great.
Yes, we did. And this was in the aftermath of Hurricane Katrina, because we recognize that those essential employees, that it's important that they are able to come back and to get to work. So we actually did a set aside, and the income limits were higher for those persons. So we were looking at firefighters, EMS workers, police officers, things of that nature.
It's almost a reward for putting their lives on the line. I think it's great.
They are indeed essential.
Other targeted folks, as I understand it, are teachers or have been teachers, and disabled folks and others, right?
Yes, we have for a number of years had a set aside for teachers, and as a matter of fact, in our current issue, we have a set aside for teachers, as well as in an issue that we're planning on starting in early July. Additionally, on another side of the agency, we have a rehabilitation program, and in that particular program, in certain parishes of the state, we're targeting persons 55 years of age or older who have disabilities to be able to have a grant to rehabilitate their homes.
So to summarize, if I've seen this and I'm ready to go, basically y'all have a website they can go to and see the banks that are used by the housing agency. But I would imagine most of the big boys here in town, the big banks, are participants.
That is correct.
Okay,
but
so go to the bank and tell them I want to apply for what I can get with the housing agency.
Yes, Louisiana State Housing Finance Agency bond program.
Okay.
And additionally, on our website, we also have the parishes that we have special initiatives in, such as the rehabilitation program. So all that information is contained on our website.
Excellent. All right, let's shift gears. We've been talking about how the agency helps the person who's going to buy a home. It also helps folks that are looking for an apartment, right? There's a website for that?
Yes, it does. As a matter of fact, on our website is Louisiana Housing Search, and there we try to connect persons that are looking for housing with the people who has housing available.
And so I assume they have to meet certain criteria, income levels, family, all basically the same stuff we've been talking about?
Yes, and you're able to put in that information on our website, and you can get to that website from the LHFA website.
Okay, and then what that does is match you with a developer or builder that has these units available because they're part of a program.
Right. As a matter of fact, if you are a person that has housing available, you're able to go ahead and put that information. So it also is a marketing tool for persons that have housing available.
Excellent. So it helps the folks looking for an apartment, and it helps the folks who have the apartments get together.
Exactly.
All right, let's now move to the other side of this equation, and that is, how does the agency help builders and developers create these units for the folks who are looking for the apartments?
One of the main ways that we do it is by we actually administer the low-income housing tax credit program. And the low-income housing tax credit is a program that has been around for a little while as well. It's a competitive process where developers are able to come in and compete for credit.
So you're not guaranteed to get any?
Oh, no. And typically, we are oversubscribed, so all
Meaning
those,
too many folks are trying to get a limited amount.
Right. But it's really a benefit to developers. The way that the tax credit program works is it actually offers a dollar-for-dollar reduction in developers' federal income tax returns.
So these are federal income tax, and in fact, I just did a show with a tax attorney, and so what it is used as is a tool to reduce your taxable income.
Yes.
Dollar for dollar.
Dollar for dollar reduction. And so what the developers do is they compete for these tax credits, and then they're able to syndicate them to be able to form the equity so they're able to build the development.
So what is the criteria to enable a developer to apply and obtain the credits?
Each year, the agency publishes a qualified allocation plan, which basically lays out the ground rules for being able to apply for the credits. With their different scoring criteria, depending upon the way that the development is going to be structured. For example, if they're targeting a certain income level that's below 60%, depending upon the geographic location, depending upon the amenities, whatever they're putting into the complex to improve the quality of life of those persons who will be residing in them. All of those factors are taken into consideration very objectively to be able to compete for the tax credits.
So no politics involved in that?
No.
It's an objective kind of laundry list of things you look at.
Exactly.
What is you said it's a scoring process. Is that given to the developers to look at?
Yes, as part of the qualified allocation plan, there's selection criteria. So going in, the developer is able to say how they want to structure their development, and a certain amount of points are given to each criteria.
Now, as I understand it, the way the developers really use the tax credit is not to reduce their income, but they sell the tax credits to some third party who wants them.
They are syndicated.
Okay, so they get the tax credits and then they sell them to somebody who needs them real bad because they're paying Uncle Sam a bunch of money, and then they get that cash and they use it to build these units for the folks who need them.
Yes, very efficient program.
Okay. Brenda, thank you so much for being on the show. This is Locke Meredith with Legal Lines. We'll be right back with Carolyn Burris. Thank you.
Cox Communications is homegrown with local programming for you. Whether it's local sports, local arts and education, local news and weather, local faith and worship, or local stations with the best in entertainment, Cox Communications brings it all home to you. It's homegrown programming with roots. Only on cable. Only on Cox.
Welcome back to Legal Lines. I'm Locke Meredith, and I'm pleased to have on this segment Carolyn Burris. She is a commissioner with the Louisiana Housing Finance Agency. Carolyn, thanks for being with us.
Thank you for having me.
Talk to the folks about what are your duties and responsibilities as a commissioner with the agency.
As a commissioner for the agency, we're 15 commissioners for the Housing Finance Agency, and our responsibility is policy orientated. We are the support entity to the agencies. We are the legal entity that is responsible for rules and regulations, and then the application of the program is given to the staff, especially our new executive director, and and we are pleased to have a very new executive director that's been with us less than a year. But he's been so fantastic for our agency, and the growth, his capacity is extraordinary.
So you guys are kind of the big picture oversight folks,
Yes.
give them the rules and regs, so to speak, and then you give them the task and send them on their way.
And we're really fortunate because we have experienced staff, and the agency has grown within its 20 years of operation. And we have had, where they originally started off with 5 members, and we are over 100 members, growing and expanding. But the opportunity comes with the leadership. And I think our leadership is, our board is sensitive in knowing that this agency had a responsibility as a result of Katrina and Rita that was devastating for the state.
Right.
We're the primary responsibility of housing, and our staff went directly into gear trying to make things applicable to make sure that Louisianians were remembered and all the respect that was given to them in home ownership, families, and those essential needs to just make our daily lives livable.
And the bottom line is, a lot of the folks, most of the folks I would guess, that were traumatized by the 2 hurricanes were folks with low to moderate income.
Well, not really, because we actually had commissioners who were totally displaced. You know, when we speak of Katrina and Rita, we should speak of Louisianians without regards to income, race, and so the devastation was statewide. So we had actually commissioners that were displaced and sent into other states just to survive.
Did I see that y'all have helped finance or help in some form of capacity over 20,000 homes?
Yes, and at this point in time, special allocations, as Brenda indicated, was given to the agency. Quickly, we had to make decisions on how to get those resources out to